Greece economic revival and lessons that can be learned from it. Now we have seen how 10 years before, around 2010 to 2013, how there was a widespread Eurozone economic crisis and many economies were falling down. The economies were crashing due to their high borrowings, more than 100% of their GDP. And the GDPs were also inflated in multiple ways through the real estate bubble and other things putting into that. And PIGS economy, we have seen in Europe how the economies have, the GDPs have wiped out, and how difficult it was during that time for their growth rate and everything. Putting a focus on Greece here, which was seen to be the lowest among all in terms of Eurozone economic crisis, the entire economy, GDP, around 30% of it got wiped out in the years 2010 to 2013. That was the height of crisis in Greece. It was all fed up by the real estate pricing bubble creation and even other things. So the GDP, the percentage of borrowing was more than 100% of GDP and other things, which led to this crisis. And Greece was unable to service the debts, borrowings from outside and everything. And in that context, now what are the learnings we can take? So if we see the chronology, after that, 2013, this economic crisis, after that, the global agencies, IMF and other, provided a structural solution to correct this economy, especially Greek economy. And the standard solution package was, first they bail out so that the debts can be serviced, evergreened and in fact managed. And additionally, so the bailouts were there, and those bailouts were conditioned on austerity measures. So the money is to be saved and less spending by people, higher taxes. So that was the austerity measures to be taken. And then the restructuring of the debts to be done based on these activities and how the fiscal deficit will be managed over the years. The entire planning, and thereafter we come to the business-friendly policies and attracting investment, and in fact even helping with the taxes and other things to augment investment and growth of economy. And with this solution, standard macroeconomic solution parameters, Greece implemented those with a conviction, and in 10 years we see the economic turnaround. Today, if we see the country is growing at a rate of 3 to 3.5% of growth, GDP growth year on year, whereas the other Eurozone, it's largely half a percentage up. 0.5% growth what we are seeing in most of the economies. Germany is seeing a recession. So in that scenario, we see Greece as coming up strongly, providing growth in the European area. The bond papers of the Greece are also having lower yield value. That means they are more credible now and being comparable to UK papers as well. And even somewhere the economic stability, the investments and all, the climate is being made, taxes are being improved, taxing culture, so that reducing taxes so that more investments can come and the economy can grow. So these things are happening in Greece, and it's a live example on how 10 years before, from a disaster case, it has turned around with these bailout packages and austerity measures and restructuring. And this is something what lessons can be learned for other economies as well. We have seen recently how the economies like Sri Lankan economy or Pakistan economy or others have faced difficulties, even Bangladesh. So the bailout packages and this standard template of solution, if implemented well, then 5 to 10 years, there is a possibility of a complete turnaround. In case that is not happening, then there are examples of complete abrupt defaults on the external debts and massive loss of credibility in terms of paper, devaluation of currency and everything. So to avoid that and be sensible, and this protocol, this process of bailout and restructuring is something what the global countries can learn from the case in point here, which is Greek economy. Thank you.